hope you're all doing fantastic on this 16th of September 2024. I'm coming to you with another riveting technical analysis for European energy markets. So hold on to your butts, and because the markets are pushing lower and lower and lower. And just one thing, and you might be interested in what the behind the scenes here looks like. So I have like cameras set up and everything, and my lights. And now I finally also have my a good wedding picture printed out from a couple of weeks ago. So this is right next to my main screen here. So always a good motivator to look at that. Okay, so European energy markets. All right, so we'll just start with the TTF here. I think that makes the most sense. It's a big reference hub here, right? So you can see that on the weekly chart and on the daily chart, we are still above the longer term trend line. So I'm just quickly zooming out for you to see where this is coming from, right? We have it from mid-February, and then we have the other attachment point in early July. Same on the weekly chart, same on the daily chart as well. And now we are gradually pushing lower. And on the daily chart, we can actually see that most of last week, nothing really happened all that much. We had this, or I think it was on Tuesday, last Tuesday, we had this big red candle, and then we had nothing, essentially. So it's dangerous. It's a tight range. It's not very comfortable for anyone who's in the markets right now. So the only trading opportunities that I see, well, first of all, they're marginal. And if at all, even on the hourly chart, can you see we are within this tight range of 34.87 and 36.34. And within that band, someone could make an argument to maybe trade the 15 minutes there, but there's no big impact on the P&L to be had here. I want to see a break past the daily charts range. So we have the 34.87, 37.9. If we break past that, then we really are dealing with a direction again. Why is that? Simply because a move below this range here would possibly also mean a move below the trend line. And then the bears would be truly in charge immediately. Above this level here, I mean, we are bearish already, but that would pull in the last remaining bears on the sideline, possibly towards the 200-day exponential moving average near 32. Above 37.9, we would start making higher highs and higher lows again. So that then means that bears, it's kind of over, maybe a little bit sideways, maybe a little bit bullish, but definitely not bearish for quite some time. So that's why I think that the hourly chart is quite interesting, because I want to know how this rectangle here resolves, because then this could be the first impetus for some gains, and then also towards the upper end of this range, or we simply crash lower, and then that's kind of it. One thing I want to make you aware of here is on the hourly chart. That's a little bit iffy, essentially. Yeah. So we are bearish below the hourly charts trend line here. Okay, so I'm just zooming out. You can see it's only tentative, but it's good enough. We are neutral right now, temporarily, but overall, the idea is still bearish. But here's the thing, and that's what TA is good for, essentially. Yeah? We start seeing that we are making higher troughs. For now, we're not making higher highs yet. So all of this could also be here, like this here, like a descending triangle, which usually resolves to the downside, right? But for now, I'm going with this here because we might as well could have put the level here as well, touching this and this. Yeah, so here it's a dealer's choice, essentially, no preference. What we can see here, however, is that for now we are making a higher trough. We are seeing that volume is solid on the up leg. And we are also seeing that this is the main point here. The stochastic, my oscillator of choice, is making higher highs and higher lows. So to me, that's showing that overall, on average, which is a little bit hidden in the price, but becomes very clear in the stochastic, the market is getting more confident. So the up legs are getting higher and higher. So that is telling me that there is a good chance for the market to push higher eventually. Now, you might be looking at the MACD as well. That is also making our first higher trough. Absolutely. And we are pushing higher, which could be seen as a bullish signal. Yeah, okay, why not? But here's the thing. Trend and momentum tools in a sideways trend are kind of useless, and I wouldn't take these signals. So even though right now the MACD would confirm my inclination of, hey, hold on, maybe this is turning out to be bullish. Yeah, I can't take this as a confirmation signal because we are in a sideways trend, and these tools tend to give false signals. So I'm just very careful. And here we can see, like in the range, we get with the 8 and 12 exponential moving average, we get like bullish and bearish signals all over the place. So that's why I'm just ignoring that. Okay, so you can see that, however, my preferred direction is still bearish. And that is not because there's a strong case for the bears to be made. It's simply because that's what's happening on the daily chart. So I'm just filtering that through to the hourly chart for now.